Hi, everybody. This is Joe from PrepAgent. Give me a thumbs up if you can hear me. Hope everybody's having a great day. And I'm looking for that thumbs up so I know you can hear me. Okay, great. Who here could tell me the difference between a deed and title? Anybody? Who here could tell me the difference between a deed and title? What do you guys think? Deed is evidence of a transfer. Title is ownership. Who here could tell me what is a quitclaim deed? What is a quitclaim deed? What is a quitclaim deed? What do you guys think? Okay, so I'm seeing a lot of fancy words like cloud on title, no warranties. If I had never been in real estate before, I had no idea about any of this, how would you guys describe a quitclaim deed? So if you have a new client and say they're going to use a quitclaim deed, and they said, what's that? You say, oh, it's a cloud of title with no warranties. Hey, would you guys say that? How would you guys explain it to somebody who's never been in real estate? A quitclaim deed. Okay, so a quitclaim deed is immediate transfer. Okay, it's an immediate transfer that implies nothing. All right, meaning it doesn't imply that there's any problems with property or there's no problems with the property. Okay, that's what the guys talking about, those warranties, those implied warranties that the quitclaim deed does not have. Would you use a quitclaim deed when you're selling a property? When you guys are selling a property, would you use a quitclaim deed? What do you guys think? It's the second, quitclaim, not quitclaim. You would not use that. Okay. When would you use a quitclaim deed? What do you guys think? When would you guys use a quitclaim deed? What's a good example of when you would use a quitclaim deed? It's transferred to family, good. Just give it to a family member, right? So those are good examples of it. In divorce, you'd see it. Those are all great examples. It's basically when you just want to transfer title, okay? When you want to transfer title. All right. Squatter. See a lot of these shows about squatters these days, like these weird shows on TLC where they have like hoarders and the guy who 3 feet or something, you know, those weird shows. Okay, so that a deed is immediate transfer. Now you guys have warranty deeds, right? You have a special warranty deed and a general warranty deed. Who knows what those are? A special warranty deed and a general warranty deed. And you guys know? Okay. A special warranty deed insures the property for the time of the previous owner. A general warranty deed is for the entire life of the property. All right? Okay. These are things I want to go over before we do questions today. I want everybody to know this stuff. Super important as we're doing property transfer today. Okay, special warranty deed shows the warranties for the life of the previous owner. A general warranty deed is the entire life of the property. Okay? All right. Title. What is title? What do you guys say title is? What is title? Who could tell me what title is? Title is ownership. Good. There's two ways you could own property. Do you guys know what they are? There are two ways that you could own property. Do you guys know what those two ways are? Severalty and concurrent. Excellent, Melissa Shepard. Great job, Melissa. Severalty and concurrent. Severalty is by yourself. Concurrent is with other people. A married couple takes a property together. Can they own it in severalty? A married couple takes the property together. Can they own it in severalty? No. Severalty is by yourself. Okay. Can you guys name different types of concurrent estates? Can you guys name different types of concurrent estates? What do you guys think? Can you guys name different types of concurrent estates? So you got joint tenancy, tenancy by entirety. Good. You guys are missing a big one. And tenants in common. Excellent. The big ones that everybody has to know is joint tenancy and tenancy in common. The other ones vary from state to state. Okay? The other ones vary from state to state. So I'm going to go over the ones we all need to know, no matter what state you're in. Sound good? Give me a thumbs up. All right, give me a thumbs up if you want me to go over the ones that all of us need to know. The rest of them, like tenancy entirety and community property, vary depending on your state. Okay. I don't want to go into tenancy entirety right now because that does not apply to every state. All right. So joint tenancy and tenancy in common does apply to every state. What is joint tenancy? Who knows what joint tenancy is? Who knows what joint tenancy is? And you guys know? What's joint tenancy? Kyle Cole wrote to tip. I love that. So Kyle, what does that stand for? So Kyle wrote to tip. What does that stand for? What do you guys think? Brenda wrote pit. I love that too. Good job, Brenda. Okay. So first you have to tip time, title, interest, and possession. Or if we're going with Brenda's example of pit, it would be possession, interest, time, and title. Okay. Time, title, interest, and possession. 4 unities. Okay. 4 unities that make up a joint tenancy. Excellent. What unity is needed for tenancy in common to be a tenancy in common? Who knows the answer to that? What unity is needed for tenancy in common to be a tenancy in common? And you guys know? Possession. Great job. Possession. Tenancy in common, you just need possession. Unity of possession. Joint tenancy, you need time, title, interest, and possession. Be very careful on your exam. They may ask you, what is needed for a tenancy in common? And the answer will be time, title, interest, it'll be time, possession, interest, or all of the above. A lot of you guys will circle all of the above because you'll immediately think it's tip, time, title, interest, and possession. But knowing if the question says tenancy in common, you know the answer would be possession, all right? So they'll try and trick you like that. Promise you guys will not get tricked, right? Everybody, right? I promise I won't get tricked. I promise. I promise, I promise, I promise. Okay? All right. Which of those two, tenancy in common or joint tenancy, would you take with a corporation? tenancy in common or joint tenancy? Which would you take with a corporation? And the answer would be tenancy in common. Tenancy in common. Why could you take it with a corporation as tenancy in common, but not joint tenancy? Melissa Shepard's way ahead of me. All right, what do you guys think? Why could you take it as a tenancy in common, not joint tenancy? Because joint tenancy, if you guys remember correctly, has the right of survivorship. Has the right of survivorship. Good job, guys. All right, tenancy in common does not, and corporations don't die. All right, corporations dissolve, which is a different standard. All right, good job, everybody. All right, so with that being said, let's do a question. A riparian owner owns land which borders on A, a lake, B, a stream, C, any body of water, or D, the ocean. Uh-oh, river's not one of the options. What do you guys think? Everybody remembers riparian river, but river's not one of the options. Okay. And the answer is B, the stream. Good. Because we know river is just a memory technique for a moving body of water, right? Okay, good. When a project is turnkey, it is said to be A, ready for socializing, B, ready for occupancy, C, ready to be built, or D, ready for rehabilitation. And the answer is B. If your screen is blurry, be sure to go to the gear icon on your screen on the YouTube video. Click on that and you could change to 720 HD and that'll make sure your screen is clear, okay? If you don't, it will be blurry. It needs to be in 720 HD. All right. In order to avoid successor's liability in the buying of a business, which of the following should be filed? A, a security agreement, B, a certificate of clearance, C, doctrine of estoppels, or D, bill of sale. Okay, and the answer is B. Good. Certificate of clearance clears you from liability. In which of the following situations would property be reassessed? A, when sold, B, annually, C, every 2 years, or D, when a property has been rehabilitated or remodeled? All right, and the answer is when sold. Good. Okay. Are you guys nervous about your exam? Hopefully not. Hopefully you guys are totally excited about your exam. It's the gateway to your new life. Neri, Mom, yours is tomorrow. Good luck. We're all rooting for you. Uh-oh, Grant's crapping himself. Careful with that. Okay, here we go. Okay, here we go. Property taxes are described as Ad valorem taxes. Ad valorem most nearly means A, market value, B, reproduction value, C, according to value, D, replacement value. Ad valorem is Latin for according to value. Can you guys give me any other Latin that potentially could come up on your exam? Can you guys give me any other Latin that potentially could come up on your exam? Who could do that? Who could tell me some Latin? Pure autre vi? Melissa, what does that mean? I see Philippin wrote lease pendants. That's a good one. Okay, so what does lease pendants mean? Any of you guys know? Who knows what lease pendants mean? Lease pendants is lawsuit pending. Nova, that's a great one. What is nova Latin for? Anybody? What is nova? Nova is Latin for new. Innovations, a new addition to the contract. Good. Caveat emptor. What is caveat emptor? Anybody know? What's caveat emptor? Caveat emptor. Buyer beware. Excellent. Nice job, guys. All right, moving right along. Which of the following items can be deducted for income tax purposes on real estate which is held as personal residence? A, annual depreciation. B, expense for repair, maintenance, and care. C, property tax and mortgage interest. Or D, losses which occur in the property sold. And the answer is C. Do you guys know which states have the lowest property taxes? Not on your exam, I'm just curious. Maybe some of you guys know. Anybody know which states have the lowest property tax? Who knows that? Nothing's low in California. California is at the highest everything. All right. According to income tax laws, which of the following is true about depreciation of land? A, land has a residual value, but improvements do not. B, land is not depreciated. C, the ACR's method of depreciation can be used when depreciating land. Or D, the land is considered to be 25% of the total value depreciated. And the answer is B. Good. Yeah, California's got like the highest income tax, property tax. Ugh, I think you got to pay money to breathe there. Okay. When a real estate broker speaks of tax shelter, he is referring to A, net income, B, real property taxes, C, principal payments, or D, income tax. I've actually heard the worst place for taxes is New Jersey, where my brother lives. He says the taxes get out of control. They're not as high income tax California, but the other taxes, he says, are just like every which way in New Jersey. Okay, so tax shelters are for income tax. Speaking of which, income tax. I think we all need to move to the Cayman Islands. Isn't that where like the super duper billionaires hide their money, in the Cayman Islands? Under federal income tax law, the basis of real property is the property's A, assessed value prior to sale, B, cost, C, fair market value, or D, purchase price minus any existing loans. All right. And the answer is cost. Good. It's the initial cost. Just a reminder, tomorrow I will be here at the same time for all you guys, just in case you're wondering. Tomorrow we're here at the same time. Okay, and Friday. And I will not be doing it this weekend. But tomorrow and Friday, the webinars will be at the same time. In order for an agreement for a transfer of real property to be binding on the buyer and seller, it must A, contain acknowledgement, B, contain an offer and acceptance, C, be typed, or D, be recorded. And the answer is B. Contain offer and acceptance, one of our 4 essentials of a valid contract. Can you guys tell me the 4 essentials of a valid contract? Who could do that? Can you guys tell me the 4 essentials of a valid contract? Who's feeling smart? Not stud, that's the 4 essential elements of value. Lawful object, offer and acceptance, capable parties, consideration. Great job, everybody. Thank you, Tina Pouncey, for that little tidbit. Hawaii has the lowest property taxes, then Alabama. Everybody looks for the lowest taxes, but if you guys look at across the country, if they don't get you one way, they'll get you another. All states have to get money somehow. So if maybe low property taxes, high income taxes, or something of that nature. I mean, they got to pay for those streets and schools somehow. Which of the following policies cover improvements on adjoining land? A, extended policy, B, Alta policy, C, standard policy covering a home, D, CLTA policy. Okay, A, good. An attachment is A, a joint fixture, B, a lien, C, a judgment, or D, an assessment. What do you guys think on this one? It's a lien. It's considered a lien. So we're not talking about the literal thing of attaching something to the property. For your exam, that would be a fixture. Okay, so you guys are thinking of a fixture when something's attached to the property. They're more talking in more legal terms with property about owing money on it. Okay, that was a tricky one. That was a tricky one, guys. The marginal tax rate is defined as A, the 29% tax rate. B, the tax rate which is applied to the next dollar earned. C, the tax rate which applies to the last dollar earned. Or D, 22% of gross income. And the answer is B. The cost basis of a single-family residence can be adjusted for which of the following? A, depreciation. B, room or patio addition. C, interest paid on a loan. Or D, fire insurance premiums. No, 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 no. And the answer is B, room or patio addition. Good. All right. Oh, reading. I hate reading. How many of you guys are thinking that right now? You see this one on the board. You're like, oh, can't stand reading. Miss Johnson owned an income property with an adjusted cost basis of $150,000 and fair market value of $200,000. She exchanged the property of another income property, which had a fair market value of $210,000. Both properties had no loans against them, and no adjustments were made for the difference in value. For federal income tax purposes, the new property will have a basis of Mrs. Johnson of, and the answer is 150 grand. So this is not a math problem. A lot of people look at this and like, oh no, numbers, math, I gotta do math. It's the worst thing ever. But this is actually not a math problem, even though there's numbers there, okay? All they want you to know is the cost base of the new property is the same as the cost base of the old property. That's it. Is this example of 1031 tax deferred exchange? I believe so. Okay, so let's talk about that for a second. Who here knows what a 1031 tax deferred exchange question is? What happened to the math videos? I do have math videos for people to do. I do not do webinars on the math because not every state has math on their exam. And most of the states that do have math have a tiny amount of math, not really a big portion of it. Okay. A 1031 tax deferred exchange means you take the money from the old property and put it into the new property. You take money from the old property and put it in the new property. Okay? So yes, you have 45 days to identify, 180 days to close the deal. Okay? So that's what a 1031 tax-deferred exchange is. 1031 tax-deferred exchange is basically a government program which gives people incentives to take their money and invest in other properties and not take it out and use it. Benjamin says, but what if you don't defer the tax? That's what the whole point of this is to take the money and put it into the other one. So it's deferred until you actually take the money out. If you sell the property and don't put it into another one, then I guess you're not deferring it and you're paying taxes on it. I don't know why you would, though. The purchase of a sale leaseback transaction would be least concerned with A, location of the property, B, general credit of the lessee, C, condition of the improvements, or D, depreciation book value of the building. And the answer is D. So it doesn't matter fair value because you quickly buy something similar. I believe so. I'm not an expert on 1031 tax-free exchange. I just know enough for what you guys need to know to pass the exam. But as you guys pass, it is a specialty a lot of people get into because it's a heavily detailed topic. We just go over enough here so you can pass your exam, which I believe is what we all want to do, right? Pass. Okay, a sale leaseback is when you sell the property and you don't leave. You become a tenant of the new owner. Sale leaseback. And this is common with commercial properties, so you can deduct all your rent as a business expense. Which of the following is not subject to taxation? A, patents and trademarks. B, a house. C, income. Or D, a boat. The answer is A. Okay, good. Intangible personal property. When the owner of a property believes that her property has been overassessed by the county assessor, she should contact the A, County Board of Supervisors, B, State Controller's Office, B, C, Assessment Appeals Board, or D, County Tax Collector's Office. And the answer is C, Assessment Appeals Board. All the following are sufficient to convey any interest in real property except A, a bill of sale, C, a lease, C, an agreement of sale, or D, a deed. Okay, remember, a bill of sale is for personal property. Good job, everybody. It's like a deed, but for personal property. A deed's for real property. Which of the following would be used to clear a defect from the title records? A, a suit to quiet title. B, a lease pendants. C, a writ of attachment. Or D, an estoppel certificate. What do you guys think? And the answer is A, a suit to quiet title. Good. Okay. A suit to quiet title? Yes, if there's somebody claiming that they have a defect in the title and they don't want to transfer it, they'll have a lawsuit to contest that. Okay, here. To alienate title to property, 1, A, encumbers the title. B, records a homestead. C, clouds the title. Or D, conveys title. Elizabeth says, how long do you have to wait to retake test fail the first time? It differs from state to state, but being modern days with things computerized, you can do it much quicker than when they used to have to do it with those bubble forms, what they call them, Scantron sheets. You guys remember the Scantron sheets? So most states you can do it pretty quickly. Okay, to alienate title to properties, convey title. Convey title. All right, guys, that's it for today. I will see you guys tomorrow. I hope you have an amazing day and keep studying, and we'll see you guys then. If you need anything, message me through the Facebook page, and I'll respond to you there. Have a great day, guys. See you tomorrow, same time.